Welcome to the Money and Wealth Show, brought to you this week by AmericanManganeseInc.com. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, the program that offers you opinions every week on business, the economy, and the markets. And this week, opinions come courtesy of the Dollar Vigilante. It's a real pleasure to welcome Jeff Berwick to the program. Hi, Jeff.
Hello, Sterling. How are you?
Yeah, I'm fine, thanks. It's great to have you. We need to know a little bit about you. You're a Canadian born in Edmonton who spent a lot of time in British Columbia in Vancouver developing a company that probably a lot of people still remember called Stockhouse.com. Take us through that journey.
Certainly. I hope they still remember. It's the largest financial website in Canada still. If you're an investor in Canada, basically you use Stockhouse.com in one way or another. Yes, I started that out of my house in 1994 in Vancouver, and it was a very interesting ride because it really went from being in my house to very quickly becoming a huge company in 8 countries around the world, 250 staff, a market valuation of $250 million, and then subsequently it basically collapsed after the tech bubble burst, and we had to basically rewind everything and almost put it back in my house again. We didn't go that small, but we really had to really downsize greatly. So that was a real interesting ride for me personally, that's for sure.
I'll just bet it was. So you went from basically nothing to a valuation of $250 million as part of the dot-com mania of the early 90s, right?
Yes, exactly. And that whole tech bubble was a really interesting bubble, and we've had a number of bubbles since. After that, it turned into the housing bubble, and now we have a bubble in government debt. But what happened during that whole tech bubble was just a real education for myself personally. I really didn't really know what was going on in economics or governments and all those sort of things, and I sure wish I had known that, because if I knew then what I know now, I would have done a few things quite a bit differently.
But out of the journey of education and discovery, as a result of going through the turbulence of the dot-com bubble, you learned a lot, and out of it all has emerged the Dollar Vigilante. So tell us about the Dollar Vigilante. It's a website, it's a blog, it's becoming more and more popular literally by the week. Tell us about it and what you do.
Sure. After Stockhouse, what I realized was I needed to understand what happened, because I started this company from so small, it grew up so big, and then it collapsed all within a matter of months.
Yeah.
It didn't make any sense to me. And so I'd been working about 18 hours a day for about 8 years straight, 7 days a week, and I was so stressed I couldn't even walk upstairs. I was really, the stress had just about killed me. And so I decided basically to sell the company and to basically travel the world for a while and figure out what's going on. And I went through a discovery, and I just read everything I could for years, all the way from about 2003 till today. I still read all this stuff voraciously. And I really discovered a lot of things. And one of the things, one of your guests that you've had on the show, Doug Casey, has become a little bit of a mentor of mine. I came across him in around 2003. And he has, all of his ideas are very libertarian, very basically anti-government ideas, because the government really, all it does is screw things up in the economy and makes things worse. And you really realize that as you understand how it all works. So I came across him, and then I started reading all the people like Murray Rothbard and all that. And then I got into Austrian economics more and more. And that's basically, Austrian economics is just free market economics. As opposed to people like Ben Bernanke, who run the Federal Reserve, they do Keynesian economics.
Yes, they do.
And Keynesian economics is completely, it's a fallacy. It doesn't even work. It's really, if you think about it, it doesn't make any sense. So I went down that path, and I really discovered about all this stuff. And once you understand free market economics, you can understand how these bubbles happen. And so I finally understood at that point why the tech bubble happened, because of the increase of the money supply by Alan Greenspan.
Well, just hold it right there for a second, because you're talking specifically about a tech bubble. You've also referred to the fact that we have currently a government debt bubble. Some would say in Vancouver, Victoria, we have a real estate bubble. What is a bubble in economic terms, Jeff?
I don't think anyone really, there is no exact definition, but exactly when people refer to a bubble, a lot of people don't understand what it is. But what it really is an increase in the money supply, and that money needs to go somewhere. If we had a solid money, like a gold or something that was actually backed, right now we have fiat currency. Mm-hmm. And so these Federal Reserves, the central banks, they just increase the money supply, and they do it in ways that you can never know where this money's going to go. And it actually never goes where they intend it to go. That's sort of one of the funny parts about the whole thing. So for example, after the housing bubble burst in the US, 2006, 2007, right, they really increased the money supply, and their goal was to get housing prices back up. The money never returned to the housing market. The money from bubbles never returned to the place where the bubble was. And now all of that's gone into commodities. It's all gone into food commodities, and that's why we're seeing major price increases in food, oil, basically all the other things that we need to live have gone up a lot in price because of this.
Back to the U.S. housing bubble, which is still, unfortunately, continuing to this minute. Another year of reducing prices, and I'm afraid no end in sight. But if the money supply was increased, that money supply was given to the banks ostensibly to loan to people for mortgages to buy houses and bring everything back to normal. The banks didn't turn it around to the people, did they? What did they do with it?
Well, they're basically just sitting on it because their balance sheets are so destroyed that they need all of this money, or else they'd all be insolvent right now. The banks basically own the Federal Reserve, and the Federal Reserve does everything it does for the banks. It has no interest in helping out people. So all of that money printing was not to help the citizens of the U.S. It was completely just to help out the banks, who were in completely dire straits, and they still are, actually. And so all of that money, people say, well, the banks should lend it out. Well, this entire system, especially in the U.S., is a completely artificial, non-free market system. These banks would not exist in a real free market, not in the way that they are today. They're completely government contraptions that have no interest in actually helping people. They're there to make money, and that's what they've been doing. The banks in the U.S. have been doing very well. Trillions and trillions of dollars have been given to these banks. You could have paid off every mortgage in the U.S. With the money that they gave to the banks.
One would think so, Jeff.
No,
absolutely.
You can. Yeah. Actually, if you look at the numbers, every single mortgage in the U.S. could have been paid with the money they gave to the banks.
Interesting stuff. Let me take a quick break here. Opinions today, as mentioned, courtesy of the Dollar Vigilante. Jeff Berwick is with us on the Money and Wealth Show, and we're back with lots more after this.
Always consult your investment professional before making any investment decision.
American Manganese, Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese, Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at TalkDigitalNetwork.com. Here's your host, Sterling Fox.
Welcome back to The Money and Wealth Show. Our guest this week is the Dollar Vigilante. Jeff Berwick is with us. Jeff, just before the break, we were talking about bubbles, economic bubbles. And of course, we've seen the U.S. housing bubble. Some would say there are housing bubbles at play currently in Canada, particularly on the West Coast in Victoria, Vancouver. Would you agree? You've spent time in Vancouver.
I'm no expert on the Canadian real estate market, and I haven't lived here for the last 8 years, but I would say I've been kind of wrong on the Vancouver real estate market. I've been very surprised at how well it's held up. And in returning to the city, and I haven't spent much time here recently, it's become quite obvious there's more and more Asian people living here. And sure. I think with the money printing going on in China and a lot of the economic growth and things happening over in Asia, and they appear to think of Vancouver as being their city in North America. Who knows? I'm not betting against the Vancouver real estate market at this time. It could be a bubble, it might not be, what happens, I'm not sure. It's a small market. You can't. It's very difficult to look at any particular one real estate market, and I'm certainly no expert on real estate, so I wouldn't say I know too much about the Vancouver real estate.
All right, well, let's go back to the Dollar Vigilante comfort zone then and talk about the banks and money supply. And you defined a bubble basically as artificial manipulation of the money supply by the powers that be, i.e. central banks, in the case of America, the Federal Reserve. There is at play right now serious artificial manipulation of the money supply by the Federal Reserve called quantitative easing, or QE2, which expires at the end of June. That's really hundreds and hundreds of billions of dollars of money manipulation. Do you see that being carried forward even after the expiry date?
They have no choice at this point. There's one of two things that they have to do. The U.S. government is so indebted that they either have to default on their debts or inflate and turn it into hyperinflation, which will end up in a currency collapse. Either case is not good, but there's no other solution. They have, in generally accepted accounting principle terms, they have over $70 trillion in debt. When you divide that by the amount of people in the U.S., 300 million plus, that works out to $230,000 per person, or almost $1 million per family of four.
Yeah.
Just in federal government debt. So this debt is completely unpayable, especially if you look at the U.S. economy now. And this U.S. economy has been completely hollowed out by the Federal Reserve and the government with all their government programs. If you look at the amount of people who say they're living paycheck to paycheck right now in the U.S., it's 80%. Mm-hmm. There's no way anyone can pay any of this debt, and everyone knows it. We're playing a big game of the emperor has no clothes right now.
Jeff, if there's no way this debt is ever going to be paid off, why is America printing these oodles of money to buy its own debt? What's the point?
The point is Barack Obama does not want to step up to the pedestal and announce that the U.S. is bankrupt. That goes against his hope and change. And
of course, yeah.
No politician ever wants to be the one who has to announce that. And so they will always choose the easier option. The easier option is inflation, because not many people understand inflation. So they can default or they can inflate, and the inflation will only just make the game last a little longer. So they can maybe last 3, 4, 5 years, maybe even longer, but who knows. But because not many people understand how inflation works, they can be fooled by it. So for example, right now we have a lot of prices rising. We have oil and food and all sorts of necessities rising, and a lot of people are starting to get very concerned.
Especially the paycheck to paycheck crowd.
Totally. And if you look at what the U.S. government's saying and what Barack Obama's saying, they're saying, well, it's China. China is making prices go up. It's the oil suppliers. They need to produce more oil. It's greedy corporations. We have to clamp down. They always go to that. They always blame the corporations. They say it's greed of the corporations. But the one thing it actually is the government and the central bank is printing so much money that the prices are rising. But because not many people understand that, and that's why they never teach you about money or central banking in public schools, government-run schools. That's the reason why. They don't want you to understand that one thing. If everyone understood that, then they couldn't do it anymore. And
the emperor has no clothes, basically, right?
Basically.
So if we were, as a large group, able to put all of these pieces of the puzzle together and decide that whatever's going on in Ottawa or Washington or London is just nonsense, we would have a rather large-scale mutiny on our hands, wouldn't we?
Totally, and that's why they don't want people to wake up to this. And I don't see any real indication that people on a grand scale are waking up, but I think slowly, thanks to things like the internet, people can get this sort of information. Yes, it's totally possible that if enough people wake up, that we could totally rid ourselves of these institutions which are actually impoverishing us. Central banks serve no useful purpose. All they do is destroy wealth and basically screw up the economy so much that so much wealth gets destroyed. For example, whenever they take interest rates down to 0% as they are in the U.S. right now, they think they're helping the economy. That's what they think under Keynesian economics.
Well, because the cost of borrowing is next to nothing.
Right.
That's what they say.
But the interest rate is how businessmen decide where the economy is. So when the interest rate goes down to 0, they figure that the economy is doing really well and they start building things. And so that's what happens. That's how the house bubble happened. So now you have rows and rows of houses in Nevada and Florida just sitting empty. Those are malinvestments. So that was assets that got destroyed because businessmen and entrepreneurs were confused because they can't trust any of the price signals in the economy because the government skews all the price signals.
This would be the same government, by the way, that continues to tell us, both in Canada and the United States, is a particular irritant for me. They continue to announce on a weekly basis, no inflation, relax, it's okay. Because, of course, they don't count groceries and gas. The two things that are, as you pointed out, going up. Everybody watching knows that they're going up. And yet, because the government refuses to include them in their weekly tally, no inflation problem. What are you talking about here?
Yeah, in the U.S. they use something called the CPI, the Consumer Price Index, and they say that's what inflation is, but that's not actually what inflation is. Inflation is actually the increase in the money supply. Price increases are a symptom of inflation.
Right, right.
But they try to confuse people by saying inflation is actually the price rises. That's inflation. And just as you just stated, they've learned how to manipulate these numbers so much now that they can basically take all the inflation out of the inflation numbers. And the way they do it is through things called hedonistic adjustments. And so they do things like if you can't afford to eat steak anymore, then they'll just say, well, steak's too expensive, everyone eats hamburger now.
Right.
And so the prices didn't go up, people just eat hamburger now. And they'll keep doing that until people are eating cat food, and they'll say that no, the prices have gone up. It's ridiculous. It's unbelievable that anyone listens to them. But again, most people in public-run government education school systems never get taught this. They never get taught what money is. They never get taught what the government does and how the economy actually really works. So most people still are in a state of confusion about this.
Better late than never. Lots more with Jeff Berwick coming right up.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our guest this week is the Dollar Vigilante. Jeff Berwick is visiting us from Acapulco, Mexico, where he now lives. Gave up the Canadian thing, but still hang on to the hockey. You got that satellite TV going, don't you?
Yeah, that's one of the reasons I chose Acapulco. You can still receive Canadian satellite TV that far south. And so, yeah, I have my 65-inch flat screen right on the beach, and that's the best way to watch hockey, I can guarantee it.
Well, Jeff, before the break, you were talking about some rather apocalyptic predictions in terms of the way the economy is going, due in large part to the fact that the masses aren't as educated about economics as we should be, just in a practical way. So if the apocalyptic clouds are gathering on the horizon, if all of this is leading to a most unpleasant conclusion, how do we as individuals adjust ourselves and our lives and our bank accounts in order to survive whatever lies ahead? And it doesn't look pretty.
I think there's, as we discussed earlier, there's two things that could happen. We could enter into a massive depression if the government actually reneges on its debt.
Right.
Or we'll have a hyperinflation and the U.S. dollar will collapse. If the U.S. dollar collapses, so will the Canadian dollar. There's nothing backing the Canadian dollar except for the U.S. dollar.
Right.
The Bank of Canada sold all their gold in the 1980s. Mm-hmm. They have 3.4 tons of gold. That's about as much as can fit in Stephen Harper's desk drawer. Mexico, as example, just bought 100 tons last month. So just
and
to
China bought 92 tons last week. So yeah, we have a tiny amount of gold. But I'm interrupting. Carry on, because this is important.
Yes. So what I actually think is going to happen, I don't think the government's going to default. I think they're going to go into hyperinflation.
Okay.
And that will mean the collapse of the U.S. dollar, which will mean the collapse of the Canadian dollar. So Canadians need to pay attention to this as much as Americans.
So what do we do?
There's a lot of things you can do. One of them is to invest in hard assets. Definitely don't invest in any of the things that you used to invest in during the 1980s, 1990s. General stocks, bonds, all of those things will get destroyed in a hyperinflation. Invest in real assets, preferably things like gold, silver, energy, real things that central bankers can't print.
What about real estate, as in land, agricultural land perhaps?
Yeah, I really like agricultural land. I prefer it in places like Argentina, Paraguay, which I was just down there looking at some farmland. That's excellent as well. That's another thing that they can't take away from you.
Right.
They can't print. Anything like that, because when we have a hyperinflation, basically the currency is going to collapse, and a lot of other things are going to happen as well. And it's very important, if you can, to get a second passport even. Just who knows what governments will start to do once this collapse happens. This is by far the biggest collapse in human history, because the US dollar is the world's reserve currency.
Absolutely, yeah.
In prior hyperinflations in Zimbabwe and Argentina, and most countries have had hyperinflations.
Yes.
All the people in those countries, they usually bought US dollars to protect themselves. And so
Right.
the people who did that didn't get hurt too bad. Now with the US dollar collapsing, what are people going to buy?
Right, the safety of the US dollar doesn't exist anymore.
Yes, so this one is going to be the worst by far. No one can predict exactly what's going to happen, but that's why people need to be just incredibly cautious and safe. Even things like having extra food in your house. If currencies start to collapse, grocery stores will go empty in a matter of hours. So it's little things like that. And I know it sounds a little crazy because we're in a little bit of an eye of the hurricane right now. But this won't sound that crazy in the next couple of years. These things probably are going to happen. If you follow all the history of all fiat currencies, all central banks, they always destroy the currency. It's just been amazing the US dollar's even lasted this long. And if you look at all the numbers, US government debt, the amount of inflation they're doing with quantitative easing, we're headed towards that, and we're headed towards it very soon.
More with Jeff Berwick on the Money and Wealth Show after this.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Looking to advertise to targeted audiences? Online at talkdigitalnetwork.com or howstreet.com. On television, The Money and Wealth Show. And on radio, This Week in Money. To learn more about getting your message in front of our audiences, email us info@howstreet.com or call us 604-699-8600.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Jeff Berwick is our special guest on the Money and Wealth Show this week. And Jeff, the message has been kind of bleak. Are there positives in this package?
There totally is positives here, and I know I've talked about a lot of really sort of scary things, and a lot of people might not have heard these things before in the past. There's a lot of positives. If we can get through this collapse, and if people can just educate themselves, get on the internet, find out what's going on, we can all get through this and get through to a better system. If we can get through to a free market system, get rid of these central banks, get rid of all this government involvement in the economy, we'll live in a much better world.
And one spot on the internet that we highly recommend that you pay a visit to, perhaps more than once, is the dollarvigilante.com. Jeff Berwick on the internet. Jeff, great to see you. Thanks so much for coming in.
It's my pleasure, Sterling.
And thanks also to Fritz and the crew here at Churchill's at the Holiday Inn in North Vancouver for the hospitality. I'm Sterling Fox, and for all of us on the Money and Wealth Show, we'll see you next time.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.